For those of you who may not know me, may not know my background, I'll give you just a brief snapshot. So, as Kim said, I'm Ashley Major from Nathan Wexler and Company. We're a CPA firm located in Concord. I've been with the firm getting closer to 8 years now. I'm a manager with the firm. I work primarily in the nonprofit practice with a niche in charter schools. So I service, I think, 4 charter schools in the state, but also follow quite closely on some of the stuff that's going on with charter schools and what the users are, but as well as a larger nonprofit practice, and we parlay into private schools as well, so there's a little bit of a diverse background there. Then, as a side, I also work in manufacturing and construction. Previous to Nathan Wexler, I had 3 internships. I have a master's degree in accounting and a bachelor's of business administration and accounting, and I am a CPA. And all of the work that I performed was reviewed by Kelly DeMori, who's the director of our nonprofit practice. She couldn't be here tonight, so I'm here. So a little bit about what we did for these procedures. So I know a lot of people like to say, oh, you did an audit. Well, I want to make sure to say I didn't do a full audit. That's very expensive, and it really wouldn't have accomplished the goals of what you wanted to do here. Annually, the school has a financial statement audit at year end. So every June, they have a financial statement audit. We completed the June 30, 2017 audit in September and for the Department of Education deadline and time. So what we did here is agreed upon procedures, and what that is, it's kind of, it's procedures that the AICPA designed for this type of occasion, when there's really something a client wants and needs, but there's no defined explanation or defined service that they have packaged. So you'll hear audit, review, compilation. Those are defined services by the AICPA, but oftentimes clients want different attestation engagements, which meaning we're attesting to something. So that is where agreed upon procedures came from. So in the case, it is exactly what it sounds like. The client and ourselves agree upon procedures that will accomplish the goal of what they need. So I'll skip right to the page that has the procedures that were performed. So the schedule of agreed upon procedures, based on talking to management, some board members, other key stakeholders, reviewing some communications between some different people, we determined that what we thought would best help the need would be to do a detailed read-through of the management prepared financial statements from July through December 31st, so the first 6 months of the school's fiscal year. And then we wanted to try to identify any possible financial statement adjustments to properly classify and record any transactions in accordance with generally accepted accounting principles, and then also with the budget. So to make sure everything lined up, all the numbers hung together, there weren't any large misstatements. So in an audit world, we would talk about material misstatements. So that would be a misstatement that would change the user's judgment of those financials. So although we didn't audit it, we were looking for those types of things. And I have performed the audit for the independent audit for the academy since inception. So I have a pretty good idea of where the numbers hang together, where misstatements might lie, different common pitfalls for charter schools, and where, and in accounting in general. So there's some common areas that people don't always pick up on, and or that we adjust during the audit process, or propose adjustments for during the audit process. Then the second procedure that we talked about was develop a periodic reporting dashboard for management so that they can present to the board and stakeholders internally and externally on a monthly periodic basis. So something that's user-friendly but also answers enough questions and has enough detail, but also isn't too complex that a layperson user can understand and see and read, and with a little bit of explanation be there. So we developed that dashboard. Then we laid in the numbers from step 1 into that dashboard. So we have an analysis of current period actual to budget and a couple other items there. And then we also thought that it would be good to compile and provide in a similar template 3 years worth of results. So we have fiscal year 18, obviously the first 6 months period, and then we have fiscal year 17 and 16 laid in, and those are the budget to actuals from the audit reports that we provided. And then as an additional last step, an analysis of the internal controls, processes, and procedures. And we had said in what we were going to do, particularly as they relate to expenditures and salaries, because that was an area of question and concern when we were talking to people. We ended up going through all of the systems, and we actually found that as it relates to expenditures and salaries, that was actually an area that had very little room for recommendation. So we'll go through these results. So now I'm going to focus on the results. This report is currently preliminary, so as the process goes, we're presenting it to management and the board today. There's a second step of review that needs to happen in our office. It's called the concurring review. So all of the work performed in our office goes through a 2 review process, a fairness and a concurring review. In this case, it'll be a 2 shareholder review. So Kelly DeMora reviewed it, and then another shareholder that's designated in our office will also review it. And management will sign a representation, management and the board, I should say, will sign a representation saying that basically that all the information they provided us was truthful, they provided us with all the pertinent information, everything that we asked, and that's standard practice from our standards. So we have to do that as part of our process. Any questions before I get into the results of our procedures?
Mm-hmm.
So the first step was we took a look at the numbers from July 1 to December 31st, 2017. And I looked in pretty good detail at, I looked at all of the detail of all of the accounting transactions that did take place during the year, and I flagged any that looked out of the norm, I wasn't sure what they were, anything that looked like it might have been recorded in the wrong spot. And then I discussed with management, what they were, why they were where they were, should there be any adjustments. In some cases I looked at the supporting documentation if I thought that was necessary. And then on a test basis, I also tested some of the balances. So we take what's called a balance sheet approach. And basically, if I know what the beginning balance sheet was, because I audited it back on June 30, and if I take the ending balance sheet and those balances tie, the income statement falls out. And so that's the lay terms of how that works. And this is the same approach we take to an audit. And then on also on a test basis, we do test some of the larger income and expense items as well. So included in the report, and I won't bore you with all of the details, is a copy of the trial balance. So in the accounting world, that's basically the raw ingredient of the financial statement. And here you'll see there's the account number, the account name, unadjusted balance, the adjustments that were done based on our procedures, what we have the final balance, so that's our cleaned up balance. And then there's a work paper reference column, and the work paper references my internal work papers, but what I left that there was to show what balances I tied in detail to supporting documentation. So that's really where I spent quite a bit of time testing. So now I'll get down to the adjustments. So this gives you just, like I said, these are the raw numbers. They're going to be translated into some of those more easily readable reporting items we're going to look at in a little bit. So as far as adjustments go, so I think there are 5 adjustments that we did as a result of our procedures. To me, in my professional opinion, none of the adjustments that we did were unroutine or unexpected. So there was nothing shocking or anything that I said, oh, okay. The first one, very minor. During an audit, we probably wouldn't even have proposed an adjustment because it is completely immaterial, $140. The only reason I did it here was just to clean it up a little bit more, make it a little more clean. And all that was there was a misclassification of account. So an expense went to an asset account of $140 and it stuck out. So we just adjusted it down to an expense account. 3 of the adjustments, 2, 3, and then 5, related to capitalization of fixed assets and depreciation. So any long-lived asset ends up on your balance sheet, and then you depreciate it over the useful life. It's not expensed at the beginning. So in this case, there was actually some items, $1,000 worth, that were capitalized that were below the capitalization policy threshold. So basically, anything under $1,000 is expense, just for administration of policy, and that's common. So, and then there was the other entry, number 5, was there were some electrical upgrades, repairs, and maintenance that were expensed that we thought would be prudent to move up to building improvements because they're really gonna last the school a longer period of time. So kind of a flip-flop. And again, this is something that we test for in audits and we see very often. It's a very common, I'd say probably 50% of any audit that I perform has some sort of adjustment related to this. And then the last adjustment related to property, plant, and equipment was to record the depreciation on those assets that were capitalized through these adjustments, but also in the past. So I don't know off the top of my head exactly how much the assets are worth that the academy has, but half of the year's depreciation was about just $22,500. And we can provide management with those schedules, but part of what our firm does is we actually keep track of the fixed asset listings. So we have those listings, we have depreciation software that we input all those assets into that generates the reports, because it can be a little bit cumbersome otherwise. And then the final entry was to record summer school deferred revenue from July. So what that is that during the audit last year, there was an adjustment because deferred revenue means you've collected the money but haven't performed the services. So you have to have a liability there before you perform those services. So for summer school, the summer schools take place in July, but you collect a lot of those funds in June. So it's kind of a timing of where your year end falls. So at year end last year, you had $5,175 of deferred revenue on your balance sheet, and that just needed to be moved to hit your income statement because you performed those services, you've earned that revenue now. So it was basically a reversing entry of that other entry before, and again, that's something we look at on a continual basis. So all in all, not much adjustment. The numbers were pretty clean, nothing that was unexpected. There was a few, what I consider minor overall. The net impact on the bottom line income number was probably what we would have considered immaterial during an audit if we aggregated them all together. So pretty good results there. So the board reporting dashboard procedures and results. I met with some of you when I was here last week. I talked to some different stakeholders. We looked at some of our experience of what gets presented to boards and what boards like to look at and see, and what is what is enough information that the user can see what's going on, but not so much that they're overwhelmed and don't know what they're looking at. So I'm gonna skip down some pages just to get to my attachments here, and we can really start to take a look at the proposed template. And I do want to say that this is a proposed template, and also these types of documents are what I consider a live working document. So I set up this template and something could change tomorrow that should be incorporated, or the board should say, our expense for repairs and maintenance is a lot more than it used to be. Can we look at that on a little bit deeper of a dive because we want to keep an eye on it? So there's different wants and needs that can be incorporated into this moving forward, but this is what we would consider a pretty good template. So what we're starting with here, it's an income statement template. So we've got your revenues and then your expenditures. And in the columns across, we're starting with the revised budget. So we're going to get into a little bit more about the original proposed and voted on budget and then the revised budget. A year-to-date budget revised. So that's really where you think it should be for the year. So if you've collected half of your per pupil aid and payments, that's what would show there, and you still have so much. Then we would have your actual amounts, so where you are through whichever period. And for today, we're going to be looking at December, and so we're only about halfway through January. Moving forward, the expectation will probably be that you'll be a month behind that. So in a typical cycle, you'll be looking at November's numbers in January. Just because the month-end close process for this type of organization, it takes longer than that, and that's pretty standard. I'd say, especially as a good start.
How long does it take?
A couple to a few weeks. So
Because our board meets at the third week of the month, so.
I'd say it could get there, but to begin with, probably not, because so
Okay.
the month ends on December 31st. If you have your reoccurring transactions in and your transactions are working on okay, then you get your bank reconciliations in. Usually takes about a week, give or take, to get those in. Then you would have to have a couple days, and as we'll see in the control procedures, you have a part-time bookkeeper now that's doing that, so she's only here a couple days a week, I think. So she would have to come in and do that. Then to turn around those numbers and then to put them into this board formatting, I'd say maybe another week. So I think it's currently too tight, in my professional opinion, a tight of a deadline. As a best practice, I think, like I said, to get there, but especially as this process is getting up and going,
Okay.
it's not out of the norm for that. At the board I'm on, we're always a month behind. So I think, as we start to go through this, if those numbers are ready in time, great, but if they're not, I don't think that should really be a penalized factor. I think that you can.
Thank you for explaining that.
Mm-hmm. Yeah, it does take longer than people think it does. I would have to say too, even especially at like half years or year ends, that we're just ramping up for our tax season now, and so we actually don't even start our tax season hours until the 21st of the month because no client is ready for us to look at their stuff yet. And those are clients that do this every single year and know exactly what we want. So I'd say it's not out of the norm. So then the two columns here are your variances to budget from actual. So we're presenting the full budget revised and then a year-to-date budget revised. So it might seem, and we'll see it in example a little bit further. So this will be really your actual as compared to where you should be for the where you are for the whole year, and then your actual compared to where you should be for this point in year.
And then it's just plus or minus for each of those.
Yes, and favorable is a positive number, so that means if you're over in your revenue numbers and under in your expenses, and vice versa, unfavorable in the parentheses. And then on major variances, and these are just in random spots, but there'll be references here that then will tie to an explanation of those variances down below. And it won't be for every variance and item, but any that might beg a question or is a large number. Now, a large number is an abstract amount, but I mean, to explain every dollar on everything just isn't practical, and is it really a useful piece of information given the cost of developing those and giving all of those explanations.
If a note were not put on there, our budget manager who will be at the meeting still could answer it, she's just not gonna put it into the report.
Yes.
Okay,
Yes,
thank you.
and I'd say, you know, some of the duties of the board, so, today I have my board meeting next week. I received the financials prior to the meeting I'm going to. I'm the treasurer. I looked through the report and there were some explanations, but there were a few other items I didn't remember what grants we had gotten, so I didn't remember why we were over budget there. There was a line item that was a little higher than I thought it might be, so I just asked a few questions, got those answers back, and then as I present in my treasurer's report, then I can pass some of that on to the rest of the board. So a lot of this is a discussion, and I think that's some of what needs to be understood is that, you know, a budget is a living, breathing management tool. So, you know, you can crystal ball as best you want in March what you think the numbers are going to be, but that's exactly it, it's a crystal ball. And so some things happen in actuality that don't mirror what that crystal ball said. Then there's variances that have very good explanations. There's nothing wrong with it, it just happened. Or say, you know, I'll use this again, but the HVAC unit goes on the roof. You never thought, they're brand new, you never thought the HVAC units would go, but they are fluky, so it does. So just things that you can't predict and plan for happen. So but as we look through to see where the actual results are for this year, that's good to keep in mind. So this was an addition that we decided to add to our procedures and what we're providing, because again, as part of our procedures, what we were trying to develop was really useful tools and some clarity around the budget, the process, what was happening. So in the current year, there was the budget original. So that's the budget that was voted on by the board. That's what was presented. And I know there was some question as to the budget and if there was more than one copy of the original budget. And we did verify with external sources that the one budget that we were working with, that management was working with, was the one that the board had voted on. So everything was right there. And then there's currently a revised budget, which is, I believe it's still in draft form, but the main change on that budget was the enrollment is less than what was expected. So based on that, a lot of the other budget numbers were adjusted, and then as well as another item that changed that was pretty significant. You know, salaries were expected to be one thing, but hiring was different. So that's been adjusted as well, because those are really the two big numbers. And so, like I said, that budget is currently in a draft stage. I think it is going to go to the Finance Committee and then possibly for a revised vote by the board. And we're going to talk a little bit more in the controls process around some of the different controls that can be put into place, and I'd say more formalized regarding the budget. So that there's a little bit more control and clarity as to the process and procedures with regards to the budget. So I'll just briefly go through the results. As I said, I'm going to grab my report just so I have my explanations in front of me. So number one, as I mentioned, the original budget was developed based on an enrollment of 400 students, which is the max that was allowed per the charter. Currently enrollment is tracking closer to 315 students, so that's what that revised number is. So that was a reduction in overall income of 466.5. Grants was an increase in the revenue number, so there's some title monies available that the school hopes to take advantage of and use. So that was what that increase was. Contributions went up as well, so that's really, there's two factors there that played in. There was an allocation, so what you can't see here, but we consider them all really almost the same thing. It's a development term. You have your annual fund, and then you have other, I'd say, major donations and gifts that are exclusive of the annual fund. Those two are combined there. So in the original number, the annual fund goal was higher and the individual contributions was lower. In the new number, the annual fund amount was actually decreased because the annual fund isn't tracking as well as hoped. So, but there was an increase in other individual contributions and donor contributions because there's been some discussions with different donors and different donor relations to say that some funds might be baked in. Fundraising activities remain the same. Summer school went down a little bit, and that's because when the budget was developed in March, she didn't know, but now we know what summer school was because that occurred in July, so $9,000. And then there was another miscellaneous income.
Is it, a question, sorry, but you said at the beginning we showed that you did a adjustment of $5,775 or something. That was for this past summer school. Is this about that? Because that's way more than 5,000.
Yes, because there was some that took place in June, or, I'm sorry.
In July, some money came in
Oh,
as well?
sorry, I get it. The
Yeah, funds in June, services
The
in July.
funds, yeah, it was the 5,000 was the funds collected in June for
Right.
July. There were additional funds collected in July for July.
Okay,
That, yeah,
that's
sorry, I had to
what-
get my
Thank you, that
dates.
explains
Yep,
that
so
point.
that went up to there's a, and we'll look at the actual results in a couple minutes. So then we get down to expenditures. And so this whole section here under the 4 is all salaries. Because that's the largest expense of the school, it was decided that it would be beneficial to have that broken out into the different, basically functional areas. So instructional, guidance, support staff, and administrative. And then under each of those, we have salaries, employee benefits, and payroll taxes. So budget to actual, allocated out here. I'm not gonna go into great detail on this schedule. There is a supporting schedule in here as well because, like I said, that was something that people had mentioned that would be beneficial. But overall, the gist of the salary changes in the budget was, because there was less enrollment than was expected when the original budget, then there was shifts in the amount of teachers and staff that were hired. Because if you have 85 less students than you were expecting, then there's some changes. And like I said, I'll go over this in a little bit more detail.
Are the column headings the same? That was
Yes.
the proposed budget?
Yep.
And then
Proposed,
revised budget?
revised, and.
Okay, so we still don't have actuals year to date.
Oh, that's in another schedule.
That's in another,
Yep,
thank
there,
you.
we've got quite a bit more coming.
Okay, thank you.
I forget exactly how many pages I have here, but it's a lot. Like I said, we'll get into that in a little bit more detail, but we're gonna continue on with the schedule. Rent and occupancy. You'll notice in the original budget, it was much higher than the revised budget. And that's because currently you're in a building that's owned by a related party, by common control. And you're paying, the academy is paying way below market value rent. So I think we've, and I like I said, I don't know the number off the top of my head, but on the 990, we've used, I think it's an $8 per square foot rental, and based on what you're paying and what that would be, and I think it's about it's close to $400,000 a year less, what you're paying for this building than you would pay at market. And that hangs true with what I know about, other charter school rent, any school rent. So, so the reasoning for the higher than budget was in hopes that with the higher enrollment, that the foundation could collect a little bit higher rent, still way below market, and have a reserve fund for larger long-term capital items, which is very common in a lot of organizations. So say the building needs a new roof, that there's cash and funds available for that, kind of planning for the rainy day. And so by benefiting you and not charging you market, there's the downside for the foundation that should something happen, that those contingency funds aren't set up yet. So that was eliminated for the next once enrollment gets a little bit higher. Your utilities, there was an increase to budget, and that is basically a function of your utility expenses are tracking a little bit higher now that you've had, 6 months of the year to look at than last year. So there's an anticipation of a little bit of an increase there. Repairs and maintenance the budget was decreased. Again, that was more for a contingency type fund, that with the lower enrollment, not able to save for that right now. Same thing on equipment. And also the fact that some of the equipment, the way the budget is written, it's more written as a cash budget versus the accrual basis GAAP budget. So it's more cash items out, whereas, so some of the items from equipment and repairs and maintenance get capitalized up into that balance sheet, like I talked about in those adjustments. And that leads us to the depreciation expense. Currently isn't factored into your budget. We'd say moving forward, it might be good to include that in your budget. A lot of organizations don't, especially when they're looking at it as a cash flow budget, because cash flow to a lot of people is more important than a GAAP financial, because it doesn't matter what your GAAP financial says. If you only have X amount of dollars in your checkbook, that's what you have in your check. So in a lot more words, everything I just said is right there. So the founder's salary proposal, this is a management developed document. All I did for these procedures is, I would say I spruced it up a little bit, and I read it as an outside user. So that's a good thing to say. So part of what I do is I take management documents all day long and say, okay, what does this really mean? Because every person that creates an Excel spreadsheet has their own way, format, formulas, color coding. You don't want to see my spreadsheets, there's a lot of colors on them. So I went through it as an outside reader and said, okay, what information is going to be important to that outside reader? How is it presented? Should something be titled a little bit differently to make it a little more clear? And then is there columns on here that aren't needed? Do they serve an internal management purpose, but for an external user, it wouldn't change what they're looking at? So like I said, this is a management document, and my spreadsheet had 2 tabs, the original. I copied over that original, and then just basically deleted a few columns, changed some colors. I think I changed the font to all be the same. It's a lot about presentation and what things look like.
Can you explain what proposed salary is?
Yep, I'm gonna go through what
You
this
will?
is.
Okay.
Yep, I'm just going over in general what we did. And so I think actually that some people in the room were given the management copy of this report. All of the data on here, save these 3 columns that I laid in, all the same is on that. It's just presented in a little bit different format. And I'll step back and say that everything I did, all of the numbers I have, besides the few adjustments that took place, and that I think the financial statement numbers that were given out were November, so there's now another month, are all the same things that have been given. It's just how it's presented. It's just geography and pretty.
No, and the narrative, because there was no narrative.
So the proposed salary was the original budget salary. So we'll just take this. There was 1 history teacher position, full-time, part-time, based on market, who they already had in the school, proposed raises, all that. They thought that the budget amount was going to be $46,500 for that position in the original budget. And this was basically the wish list of positions as well, per se. So if we have 400 students, we're going to need 4 history teachers, 5 English teachers, and so on. Then as additional compensation for department chair, vice chair compensation, there's an additional stipend for the additional work related to that. And then I think that's the same thing, correct me if I'm wrong, for the other stipends, or if they take on additional classes in addition to their full-time workload. So obviously, someone's not going to take on an additional class if there isn't some sort of incentive to do that. So this side was the proposed budget, and we're gonna get into a little bit of a variance analysis down below, but we'll keep going with this. Then here is the actual rounded salary, so this is what the teacher was actually hired for, took on for duties, et cetera, et cetera. So this is what the actual salaries for the year are currently.
And you have notes, nicely done.
So we'll go down to the bottom now, because this is the detailed of all the instructional positions here, as they were laid out. And these are management notes, so these are basically what the position was. But that was I'd say those are their internal notes even. They're not formalized, I did not go through them, I did not look at that, but I figured it would give the reader a little bit more information. So it's summarized down here towards the bottom. So these are faculty, admin, guidance, and then, administrative down there. So what I did was I laid in, so as I said, these numbers here were from the original proposed budget. I laid in exactly what the original proposed budget said, and then there was some slight variances to that. And so I said, okay, well, why were there variances? What caused that? And I put a note down at the bottom. But the basic, I'd say the basic gist of it was that the original budget was really the wish list amount, and then this detailed schedule was even tweaked even more from that original development of numbers. So as you'll see here for the executive assistant piece, there was 183,000 budget in the total budget, and including 2 line items up here, the variances. The full budget had $28,000 more in salaries there budgeted, and I said, okay. And I thought to myself, what could that mean? And as an auditor, what we're trained to do is to come up with the answer before we ask the client. So when I have a question, I'm supposed to make my own judgments and have my own answer before I ask the client. And it's kind of our testing. So we analytically think about things like, okay, what could be there? And we'll come up with maybe 3 or 4 different plausible answers, and sometimes rough, but I'm pretty good at knowing about what's gonna happen. And then we're supposed to ask the client blindly. So leading is a bad thing, so I'm not gonna go and say, hey, there's $28,000 there. That's about the same as one of these salaries in this position. Did you have an extra position in your budget that you eliminated? I'm not gonna say that. I'm gonna go to the client and say, hey, there's a $28,000 variance to your budget. What happened there? And I want their answer to match one of my answers. So that's exactly what it was. I looked at this $28,000 and I said, that's interesting. Most of the executive assistant positions, if I took an average there, we're gonna be pretty close to that $28,000. I wonder if there was an extra position in that original budget that wasn't on this detailed spreadsheet. And you know what? That's exactly what the answer was. So just some of that, and then as well as there was a possibility of another additional person in faculty and or additional stipends that those positions didn't end up being needed basically at this point in time because of the lower than budgeted enrollment. So really just watching and revising of the original budget numbers to fit those enrollment numbers. You know, the fiscal management of it all. And these are management notes here. So now, and there's still one more report after this, so. So this is the board reporting budget to actual. So as I said, we've got, we presented the revised budget because we think that that's really the most meaningful. That's, I mean, you're not now looking at 400 students, you're looking at 315. So those are the numbers that we're gonna mean something. Your year to date, so I'll go over some of the assumptions and estimations that took place there. Your actual amounts, those are those numbers we saw on that first page with the adjustments. You know, as I said, all the ingredients to the recipe, here's your dinner. The budget revised for the whole year, so this is, I look at this column really as either basically what you have left for the year. So if you're looking at your fundraising goals, well, you said you were gonna raise 20, you've raised 15, you have 5,000 left to raise for the year. But are you on track for where you should be for the year? That's what this year-to-date column is. So to go over some of the key numbers, we'll go over the year-to-date and how those were developed, I guess would be a better example. Currently, internally, management doesn't track the budget on a monthly basis. That's a pretty sophisticated model to do. But in this case, there were some pretty easy inputs we could use on the large numbers to get where we should be as of a certain month. So for the per pupil aid, what we looked at there is what remittances could you have received from the state. So you've received two per pupil aid payments so far at 315 students. So you should have received, and those are set dollar amounts too, the per pupil, what you get, it's, I think, it's $2,077 for the first two payments. So $2,077 times 2 times 315, you should have received that much so far. Grants, contributions, fundraising, basically we just did a half the year because we're half through the year. For if you're presenting this on a monthly basis, you'll do, 7/12 next month of the budget for those items. For expenditures, salaries, we did based on payroll periods. So it's 26 payroll, 26, and there's been 13. So you are at exactly half, but in case a month falls that the payroll date is in a different payroll period, is the most accurate measure to separate those. And then I'm pretty sure everything else was 50%. That's a pretty good measure there, except for the professional fees, which typically are recorded at year end in June, because we perform the audit after year end, but we record it it's accrued for the period that is being audited, but that happens at year end. So you won't see that all year until June. So to go over where you're at, let me move on to my next explanation. So as I said here, the total budget, so this is $836,000 left to collect for the year on your per pupil aid, and that approximates what you're going to collect from the state in those extra payments at 315. You actually have, at 315 students, you have 872 round numbers left to collect on your per pupil aid. So you say, oh, that doesn't match the 836 exactly. The reasoning for that is there's an extra payment that occurs every year, and it occurs, the way it's recorded at Founders is that it's recorded on the next fiscal year, just because the amount is really hard to determine. We've tried to figure out the formula. It's really hard to determine. So in accounting, if an amount isn't determinable and hard to estimate, it doesn't get recorded in an actual basis. It gets recorded when it happens. So for last year, I believe it was around $39,000 was what that payment was that was received, I think in September or November, or maybe
It was October.
in the fall. And so that's why is that the budget numbers are based on the state aid per student times the number of students, and then there's this extra payment that's not based on all students.
Based on differentiated aid, which is like specific populations, so special education, free and reduced lunch, English language learner, and kids that don't test proficient in reading in third grade.
not easy for us to predict as a charter school because the forms don't always get reported, there's a lot of different things. It's a formula now for charter schools, right,
Yeah.
that it's put through
You're the one that reports the information to us, so,
from what we receive.
for the special education pieces. I
Oh,
don't know.
no,
Well,
not that, no, I'm
special-
talking about I think we've had this conversation, the free and reduced and how we calculate all of that too. That check.
Yeah, so that should come from you for the free and reduced.
Right,
lunch.
if they report it to us.
If they report it to us.
That's
Yeah.
the piece I'm talking
Yeah.
about, it doesn't get reported a lot.
And so this is, we only saw this amount, and I don't know if it was charter schools were all receiving this, I don't know the history. I think last year was the first year we saw this amount, being as income for charter schools, and I think some of that too might have been that reporting. I think there was a lack of knowledge in possibly the charter school management community. And like I said, Matt probably knows more, there's probably people who know more about this than me, but I can see from my perspective about how to, and what needed to be reported in order to receive these dollars.
And they've historically underreported their numbers, sorry to interrupt you guys.
Yeah.
Charters have historically underreported their numbers, parents, historically have underreported their
Yes.
ability to do that, that they would qualify.
As it relates to free and reduced?
Yes.
Correct.
And, yeah.
Okay, so that's the they you referred to,
That's
Kim?
what I was talking
So,
about.
the information flow then is parents to you and on to you?
So there's, for free and reduced lunch, which that's the biggest category for charter schools and where y'all struggle the most. So it's an additional almost $2,000 per student for a kid that is considered free or reduced lunch. So a family that is below 185% of the federal poverty limit.
Got it?
So there's two ways of qualifying, well, there's like two ways of qualifying in theory. So one is that when you enroll a child, you have them fill out a free and reduced lunch form.
Right.
This doesn't necessarily mean you as the charter school have to provide that free or reduced lunch, and that's the thing that's actually, I think, often confusing. I think some charter schools are like, well, I'm not gonna do the form because I'm not providing meals. It's actually just a test of poverty. So the state has said that we know that a child that comes from a poor family typically will cost more money to educate because they need additional resources that the school must provide.
Got it.
So we will give you more money for that. So those are determined from the free and reduced lunch forms that the schools actually collect. We know that charter schools, typically the parents don't like to give additional information, so sometimes the charter schools have had trouble getting that. However, though, so those are the ones that you know about. If you have a family who has said, I'm not filling out the form for your school, but they are taking advantage of other federal assistance, TANF,
Yeah.
most
Cross-reference.
yeah, so not, so unemployment is not one people often confuse that, but mostly TANF, SNAP, those sorts of things. We actually get that information directly from the federal government. So we're gonna give you money for that because we know that that family qualifies.
Regardless of whether
And
they
that's what
report.
Kim, that's what Kim is talking
Yeah.
about, doesn't necessarily know, so.
Okay, that
And
makes
that makes it a little bit hard, but it's free money.
Yeah, exactly.
No, no, there's no such thing as free. We taxpayers pay for it.
But, so that's what that additional payment is, so why you're actually ahead of budget on your per pupil aid as of right now.
Now, as a parent, I'm gonna ask a question,
Mhm.
and I don't know if you're the one to answer this. When I see that we budgeted 67,000 for contributions,
Mhm.
year to date, that would have said that by this point, we should have been at 33,500.
Possibly, yeah.
Well, about half,
Mhm.
right? Because we're 6
Mhm.
months in. But yet we've only actually brought in 5,400.
Mhm.
Is that a trigger to say, maybe we need to revise even further? Or is that something where it would be, I see a little note next to it,
Oh,
is it
I have
explained?
some explanation down below.
But as a parent, that triggers me, that's a significant amount.
I'd say of that, 20,000 is of annual fund, which I'd say what that tells me, and that's a revised lower amount, is that people, and this is in general, so I'm gonna tag, management, parents, the board, guys at the outreach committee, that they need to start stumping for those annual fund dollars a
Okay, so
little bit
annual fund
harder.
goes under contributions, not
That's where it is,
fundraising.
yep.
Then explain what's.
And then, and then there's also in the contributions, some individual donor contributions that are possible. So historically, we know about how much the school collects in contributions. There are certain donors that the school knows about that give certain amounts of money and or could have said, I'm thinking about giving you this much money. Or they know of avenues that if needed, they could get some money. So maybe I've said to the school, well, if you're still behind on budget later in the year, I'll give $5,000.
Well, didn't you tie earlier together the contributions and the fundraising? They're tied together, and the fundraising is in fact significantly above budget. So do those balance one another?
It does some too. I would say it does some too. So the next is fundraising activities. So those are some of the smaller activities that take place in the school. So I think there's a raffle in there. In the past, there's been a craft show. I think the school run fundraisers in there.
Does school store go in there or under student activities?
School store in this is under student activities.
Thank you.
I believe.
Because that's phenomenal this year. It's.
I believe, but I can double check, but I'm pretty sure it's not in that 15. Because I think 11
Okay.
of that is the raffle. But as Matt,
Yep.
yeah, Matt, okay, I'm like, I saw
Yeah, I'm
Matt.
sitting right by
No,
it,
brilliant,
sorry.
thank you.
Double Matts.
I get a lot of Mark, I get a lot of Mark.
That's what.
So thank you.
Our firm now has 3 Ashleys, so I'm, so the fundraising activities, so you may say, how are those tied in? I mean, those are separate activities that are being run. Well, if I'm a donor and I know I give $500 to my son or daughter's school, and I give $500 to this organization a year, and I give $500 to this organization a year, and I've already bought a book of, 3 books of raffle tickets that my son or daughter had, well, that's gonna be $75 of my $500 contribution. Whereas if you approach me for annual fund first, I might say, I'm gonna write a $500 check straight to annual fund. So if you're tapping into donors in other areas, it does reduce what they pay in other areas. So if I know I can get a raffle ticket for my contribution and might be able to win something, well, I'd probably donate more than if I'm just writing a check that goes. So there is an interplay there, and as you'll see, that the fundraising activities is above budget. So
On the whole, we're in decent shape.
and if the organization is, philosophically and or the volunteers that are doing a lot of this